Think it's too late to get into crypto? That ship hasn't sailed, it's still boarding. But knowing how to start can make all the difference between confidently investing and falling into a scam.
Welcome to your Money on Easy mode with Damien.
In this episode of Your Money on Easy mode, we're cutting through the noise and giving you a real-world guide to getting started with Bitcoin and Ethereum. From choosing the right exchange to securing your wallet and avoiding beginner mistakes, we'll walk through exactly what to do and what to watch out for. If you're still unsure what cryptocurrency even is, hit pause and go check out my last episode, What the Heck is Crypto? It's your crash course on how crypto and blockchain work. Then, come right back here for your step-by-step blueprint to investing wisely, staying safe, and skipping all the hype. Let's dive in. Okay, so you've learned the basics and you're ready to dip your toes into the crypto waters. But how do you actually buy Bitcoin, Ethereum, and other cryptocurrencies? And once you have them, where do you keep them? Let's walk through the basic steps for investing in crypto responsibly. Step 1 is choosing a platform. The most common way to buy crypto is through a cryptocurrency exchange. Basically an online platform where you can exchange traditional money, like US dollars, for crypto. Some well-known exchanges include Coinbase, Binance, Kraken, and others. For beginners, user-friendly ones like Coinbase or Kraken are often recommended because they have simple interfaces and good security records. These work kind of like stockbroker apps. You sign up, prove your identity. Yes, most will require some ID verification due to regulations, and you can connect your bank or card to buy crypto. Bitcoin and other cryptos are bought and sold on the market. Exchanges match buyers and sellers, just like a stock exchange. There are also peer-to-peer marketplaces and Bitcoin ATMs in some places. But for most beginners, a major exchange is the easiest route. Step 2, buy your cryptocurrency. Once you have an exchange account set up and you've deposited some money into it, say you deposit $100 from your bank, you can place an order to buy Bitcoin or Ethereum. Now, the good news is that you don't have to buy a whole coin. A lot of people think Bitcoin is over $100,000 each. I can't afford that. You can buy tiny fractions. If you spend $100 on Bitcoin, you'll get $100 worth of Bitcoin, which might be a tiny fraction of one Bitcoin. The important thing to note is that you don't have to buy a whole coin. The same with Ethereum. It's divisible, so you can start with small amounts. The exchange will show you how much you're getting and charge a fee for the transaction. Once that purchase is complete, the crypto you bought will appear in your exchange wallet, which is basically an account balance that you have on the exchange. Step 3, storing your crypto. Now here's the crucial part, how to store your crypto securely. When you buy on an exchange, the crypto is held in a wallet that the exchange controls for you. That's convenient, but it's kind of like leaving cash with a bank. You trust the bank to keep it safe. Many people choose to move their crypto to a personal wallet that they control, especially if it's a significant amount or a long-term hold. So what's a wallet in crypto terms? It's a bit like a digital bank account, but instead of a bank, you are the bank. A crypto wallet can be either a software wallet, which is an app on your phone or your computer, or a browser extension. Some examples are Trust Wallet, MetaMask, which is popular for Ethereum tokens, or even the exchange's own app if you keep it there. These are usually free and convenient. Option 2 is a hardware wallet. This is a physical device that looks like a USB stick that stores your private keys offline. Private keys are like the secret password that proves the crypto is yours and it lets you send it. Some popular hardware wallets include Ledger and Trezor. I personally have a Ledger myself. These add an extra layer of security because they are offline and they're immune to online hacks, for the most part. Now, keeping your private key safe is absolutely critical. There's a popular saying in crypto, not your keys, not your crypto. That means that if you don't hold the private key, for example, if your crypto is on an exchange, the exchange holds the keys, then you don't have full control. If the exchange has problems, say if it gets hacked or it freezes withdrawals, or if it's run by an evil person like Sam Bankman-Fried, your funds could be at risk. On the flip side, if you do manage your own keys, you still must be very careful. If you lose your private key or the recovery seed phrase, which is usually a 12 to 20 word secret backup for your wallet, you could lose access to your funds permanently with no recovery. Remember that story of the guy who threw away his laptop that had a bunch of Bitcoin on it? He's been digging in that landfill for years trying to recover that laptop because he had it stored offline. There is no forgot my password in decentralized wallets. So the decision is, for small amounts or convenience, you might keep it on a reputable exchange. Just make sure you use strong passwords and two-factor authentication. For larger amounts or longer-term holding, many people suggest moving your crypto to a personal wallet that you control. It's like the difference between keeping your money in a safe deposit box at the bank versus your personal safe. Step 4, managing risk and your investment strategy. So this is more general investing advice, but very important. Crypto is known for being extremely volatile. Prices can swing up and down quite a bit. So as a beginner, start small. Only invest money that you can afford to lose without it affecting your day-to-day life. Crypto is risky. There are no guaranteed profits. It could go up a lot or it could go down a lot. There's another saying in the crypto world, DYOR, do your own research. Before buying, take time to understand the project. With Bitcoin and Ethereum, you'll find tons of information, so maybe you're comfortable with why you're investing in them beyond just someone told me or the price went up last week. Some investment strategies. Avoid hype-driven decisions. If you see a coin shoot up in price, resist FOMO, fear of missing out. Often by the time that you hear about the hype, the big surge in the price has already happened. Chasing hype can lead to buying high and then suffering a drop. Next strategy, think long term. A common strategy for beginners is called dollar cost averaging, which means investing a small fixed amount regularly, say weekly or monthly, rather than a huge lump sum all at once. This way, you buy more when prices are low, less when prices are high, averaging out the cost over time. It takes market timing out of the equation and helps reduce your stress. Strategy 3, diversify. Even within crypto, you might not want to put all your eggs in one basket. Many beginners stick to Bitcoin and Ethereum at first since they're the most established. If you decide to venture into other coins, be cautious and understand that smaller coins can be even more volatile or risky. Also, consider crypto as just one part of your overall investment portfolio. It's wise not to make it 100% of your investments, maybe not even 5% of your investments. Here's another practical tip: stay secure. When you start dealing with crypto, you become a bit of your own bank, which means you have to think about security. Enable two-factor authentication on your exchange accounts, usually with an app like Google Authenticator. Don't use text messages if possible. They're less secure than an authenticator app. Also be wary of phishing attacks. Double-check website URLs and don't click random links that are claiming to be an exchange or a wallet. Never ever share your wallet's seed phrase or private key with anyone. No legitimate support or authority will ask for it. Scammers very often trick newcomers into giving this up. If you use a hardware wallet, make sure to buy it from an official source because there have been cases of tampered devices that were sold by third parties. Treat it like how you'd guard a physical wallet full of cash, since transactions can't be reversed. With a credit card, if someone steals it and uses it, you can call the bank and reverse the charges. Typically. With crypto, if someone steals your coins and gets access to your private key, the money is gone permanently. So take those precautions. To sum up this section on getting started, use a reputable exchange to buy your crypto. Consider where to store it, either on the exchange or a personal wallet. Invest responsibly with small amounts, do your research, and have a long-term mindset. Finally, practice good security. If you follow these steps, you'll be off to a solid start. Now, as you start exploring crypto, you'll likely hear a lot of opinions and wild stories. So that brings us to our next part, common misconceptions about crypto. Quick question, if someone handed you $10,000 right now, would you know exactly what to do with it? Honestly, most people don't, and that uncertainty, well, that can cost you big time. So that's why I created something free just for you. Yes, F-R-E-E. And that is my Easy Mode Money Ladder. The Easy Mode Money Ladder is a simple step-by-step guide to help you figure out exactly what to do with your money and when. This is not a boring budget worksheet. This is a no fluff guide that tells you exactly when to build your emergency fund, how much to put in it, the best way to crush your debt, and the steps you need to take, which aren't that complicated, to start growing real long-term wealth. All of this one simple step at a time. No matter where you are in your money journey, this guide is for you. It will help you plan your next money move with confidence. And did I mention that it's free? Yep, totally free and will always be free. If you want this guide, and I think you should, then go to my show notes and click on the link to my Stan store. That's simply my internet storefront where I give away this guide for free. Download it, follow it, and let's put your money on easy mode. Now, back to the show. Cryptocurrencies, especially Bitcoin and Ethereum, have been around long enough to gather a fair share of myths and misconceptions. So let's tackle a few big ones that often make people hesitant or overly optimistic for the wrong reasons. Myth number one, crypto is only for criminals. This is probably the oldest negative stereotype about crypto. It is true that in Bitcoin's early days, it was used on some illegal marketplaces like the infamous Silk Road, because you could buy stuff somewhat anonymously. And yes, criminals have used cryptocurrencies just like they use cash. But saying crypto is only for criminals is like saying the internet is only for hackers. It's just not true or representative of the whole. Every transaction on Bitcoin and Ethereum is on a public ledger, the blockchain, which means law enforcement can often trace illicit activity more easily than if criminals use cash. There have been multiple cases of agencies tracking down criminals by following crypto transaction trails. Remember that crypto transactions are pseudonymous. You have an address that isn't directly tied to your identity, but if someone can link that address to you, say through an exchange's KYC or just observing where the funds go, they can see every transaction from that address. It's like publishing all your financial transactions, but without your name on them. There are some privacy-focused coins out there, like Monero, for example, that aim to be more private, but Bitcoin and Ethereum are quite transparent. Also today, you have big institutional investors, tech companies, and even payment companies involved in crypto. So it's definitely not just for shady stuff, it's gone pretty mainstream. The bottom line, criminals have used crypto, sure, but criminals also use phones, cars, and the internet. That doesn't make those things for criminals only. Most crypto users are normal, law-abiding folks. Myth number two, crypto is easy money. Yes, the FOMO and the success stories. This one is important to debunk for anyone who's beginning in crypto. While it's true that some people have made a lot of money, some early Bitcoin adopters and millionaires, and some traders have cashed in on big swings, it's not typical or guaranteed. You tend to hear about the big wins, but not always the big losses. Crypto is extremely volatile. Prices can soar, but they can crash just as dramatically. If you go in thinking it's a lottery ticket or a quick way to double your money, you could be in for a harsh reality check. For every story of someone who bought Bitcoin at $100 and sold at $50,000, there are many who bought at a peak like $70,000 and saw it drop to $30,000 or lower and panicked. Markets can stay down for months or even years. In fact, Bitcoin has had several big crashes in its history where it lost 50% or more of its value before recovering much later. Ethereum, too, has huge run-ups and downturns. So crypto is not a get-rich-quick scheme. It requires understanding and patience. If it were easy money, everyone would be doing it and succeeding. The reality is it's high risk, high reward. Responsible investors approach it with caution, as we discussed in the How to Invest section. Myth number 3. You have to be a tech genius to use crypto. Investing in crypto can seem intimidating at first because of all the new terms, blockchain, wallets, keys, etc. But the user experience has improved a lot. If you can use online banks or shopping, you can use a crypto exchange app. They're designed to be user-friendly now. Setting up a basic account and buying crypto can be done in minutes with guided steps. Using a personal wallet is an extra step, but many wallet apps are quite straightforward too. You also don't need to know how to code or how cryptographic algorithms work internally, just like you can drive a car without knowing how to build an engine. That said, you do need to educate yourself on the basics, like how to keep your info safe, how transactions work at a high level. But by listening to this podcast, especially the previous episode, you're already showing that you're willing to learn. If you take it step by step, you'll be fine. So now let's talk about the real risks. What should newcomers truly be cautious about? We've hinted at some of these risks already, but let's lay out the main risks and considerations so you can go in with your eyes wide open. Here are some of the big ones. Volatility. This is probably the number one thing that you hear about. Cryptocurrency prices can swing wildly in short periods. Bitcoin might be 70,000 one month, then drop to 50,000 the next, then surge again. Sometimes there's even larger swings than that. Ethereum, similarly, can double in price in a few months and then lose half its value. These moves are much more extreme than most traditional investments like stocks or bonds. So for a newcomer, this volatility can be emotionally challenging. It's hard to see your investment value go down 30% and not panic sell. But volatility is part of the deal with crypto right now. Over the long term, early investors have been rewarded, but there have also been long stretches, called bear markets, where prices stayed down for a year or more. So always be mentally prepared for ups and downs. If a sudden drop would keep you up at night, you have probably invested too much. The next risk to watch out for are scams and frauds. Unfortunately, the crypto space has its share of bad actors looking to take advantage of newbies. Common scams include phishing scams, where someone might send you a fake email or link that looks like your exchange or wallet to trick you into entering your password or seed phrase. Always double check URLs and never give your seed phrase out. Next up, pump and dump schemes. You might see social media posts or even get messages about a low cap coin that's going to the moon. Buy now. Scammers hype up a cheap coin, the price jumps, people buy in, then the scammers sell their huge stash at the top, the price crashes, and everyone else is left with the losses, or left holding the bag, as they say. Next scam to watch out for is what are called rug pulls. This is when a new project, it's often a decentralized finance project or token, a new coin, attracts investors, then the creators suddenly disappear with the funds, effectively pulling the rug out from under the investors. This is more relevant if you venture beyond Bitcoin and Ethereum into some of the newer tokens, so extreme caution there. Next scam to watch out for are fake giveaways or impersonations. Particularly on X or YouTube, you might see things like send 0.1 ETH to this address and get 0.5 ETH back with fake celebrity accounts or whatnot. These are always scams. No one legitimate is randomly multiplying your money. Also watch out for malware. Be careful of the software that you install. Malicious software can potentially look for crypto info on your device. Use trusted wallet apps and keep your computer secure. Sticking to well-known platforms and not chasing outrageous offers helps you avoid most of these. Use reputable exchanges and wallets. Be skeptical of unsolicited offers or advice on the internet that promise high returns. And double check everything. Like if you get an email from Coinbase that looks fishy, better to go manually to the Coinbase website instead of clicking the email link. Security. We touched on this, but it's worth reiterating. In crypto, you are your own bank. This is empowering, but it's also a big responsibility. If you lose your wallet's recovery phrase, no company can help you recover it if it's a non-custodial wallet. People who have lost money by forgetting passwords or throwing away the wrong hard drive, There's that famous story of someone who threw away a drive with millions in Bitcoin. If you send crypto to the wrong address by mistake, there's no undo or bank to call. The transaction is final. It's gone to whoever owns that address, so always double check addresses. Many wallets even show the first and last few characters of an address more prominently to help you verify them at a glance. Let's talk briefly about hacking. While the core cryptography of Bitcoin and Ethereum is very strong, the weak links are usually human. If someone hacks your exchange account, say you reused a password from a leaked database and you didn't use two-factor authentication, or someone steals your private key, they can steal your funds. So practice good digital hygiene is crucial. Are you still making minimum payments and getting nowhere on your pile of debt? Let's change that. If your credit card balance feels like a boss fight that you just can't win, well, I made something for you. It's called the Easy Mode Guide to Destroy Your Debt, and it gives you the exact plan to break free. In this 23-page guide, we'll bust through common myths, learn step-by-step strategies, and you'll discover how to pay off your debt faster, without shame, overwhelm, or giving up everything that you enjoy. Whether you're into the snowball method, the avalanche method, or have no idea what either of those mean, this guide is for you. If you're ready to finally start paying down your debt, then this guide speaks plain English and delivers results. It's just $19.99 and it's available in my storefront. If you click the link down below to enter my stand store, you'll see a big green button to purchase the guide. Please don't let another month slip by with no progress. Hit pause on this video, scroll down to the show notes, and click the link to download this guide. Now back to the show. Now let's take a different angle and look at some of the regulatory and legal risks to buying cryptocurrency. Depending on where you live, the legal status of crypto can vary. Some countries are very crypto friendly, others have banned certain crypto activities. These regulations are still evolving worldwide. For example, there may be some tax implications. In many countries, selling crypto at a profit means that you owe capital gains tax. Some banks might be cautious if you move money to or from crypto exchanges. And there's the risk that new laws could impact the market or how you're allowed to use crypto. Keep an eye on the news in your region regarding crypto rules, and maybe consult a financial advisor or accountant about the tax part once you get involved. Okay, one last area of risks to cover before we wrap up, and those are the technology-related risks. Crypto and blockchain tech is still relatively young. Sometimes networks have technical issues or bugs. Ethereum, for example, has had periods of very high fees when the network gets congested. There are also forks where a blockchain splits. Bitcoin had a famous fork that created Bitcoin Cash in 2017, for instance. These things can be confusing. Generally, with Bitcoin and Ethereum, they've proven quite robust over the years, but nothing is 100% guaranteed in tech. Just something to be aware of as you dive deeper. You'll hear news of upgrades, like Ethereum's upgrade to proof of stake, or potential technical debates. All right, we have covered a lot. What crypto is, a bit of its history, how to get started, myths to ignore, and the real risks that you need to keep in mind. Let's wrap up with some closing thoughts and next steps for those of you beginning your crypto journey. To all the beginners out there, congratulations. You've just taken a whirlwind tour of Bitcoin, Ethereum, and the crypto world. By now, you should have a clear idea of what cryptocurrencies are and why people are excited about them, but also a healthy understanding of the risks and realities. So, final advice in a nutshell, keep learning. This podcast is a starting point. The crypto space evolves quickly, and there's always more to learn. So check out beginner resources on reputable websites. Many of the exchanges have educational sections to them. And there are sites like CoinDesk and Cointelegraph that explain crypto concepts. There are some great YouTube channels as well and online courses for crypto beginners. Just make sure that your sources are trustworthy. Closing thought number 2, stay skeptical but open-minded. It's good to be skeptical of the grand claims, like guaranteed profits or a coin that will for sure be the next big thing. At the same time, keep an open mind to new ideas. Crypto brings together tech, finance, and social concepts. It can get pretty philosophical even. Don't be afraid to ask questions and seek out community discussions. Finally, practice responsible investing. As I said, only invest what you can afford to lose. Set some rules for yourself, like targets for profits or losses, and stick to your plan. It's easy to get swept up in the excitement, but discipline is key. And then security first. Before you even buy, make sure you have a game plan for security. Your wallet setup, using two-factor authentication, secure passwords, etc. This will save you many headaches later. But please enjoy the journey. It's not all serious warnings. Participating in crypto can be really fun and empowering. The first time you send a small amount of Bitcoin to a friend across the country and it settles in minutes, or when you see your investment grow, or experience the first big dip and then recovery, you become a part of the global community of crypto users. It's pretty cool to realize that you have control of your own assets and are on the cutting edge of technology. Remember, everyone was a beginner at some point. Even the crypto veterans started with confusion and questions. So if you're just starting out, don't feel bad about what you don't know yet. Take it step by step. All right, if you enjoyed this episode and found it helpful, be sure to subscribe and share it with a friend. Thanks for watching. See you later.
Thanks for listening to Your Money on Easy Mode. If you enjoyed this episode, then please subscribe and share it with a friend.